Okay, good evening everyone, and thank you for joining me in my webinar on how to use your legislation. So I asked you, just by way of an introductory question, what you felt about the legislation, and you can see the majority of you there have said that you are totally daunted by the number of volumes. And let's be honest, the sheer size of each of the volumes is pretty daunting too. The ATT and CTA exams are open book in the sense that you can take the legislation into the exam with you. And in theory, the legislation does have all the answers, but there's a lot of it. And you need to be familiar with the legislation and with how to use it for it to be of any use to you in the exam. So I'm hoping, my intention is that by the end of this session, you will all feel a lot more confident about navigating your way around the legislation and how to highlight it in a way that's going to be most useful to you. Okay, so let's get started. I'm going to go through some slides with you. I will, at the end of the session, leave up a pod which allows you to download those slides if you don't have them. So, the legislation for the 2020 exams, you can take into the exam with you the yellow and orange Tolley legislation, and you should be taking in the legislation for 1920. The examiners have given very clear guidance as to what you can do with the legislation in terms of marking it up. And let me talk you through what they have said. They have said that you can underline anything that's in the legislation, like so. You can sideline the legislation. Now, when they say sideline, what they mean is you can take your legislation, and I've just picked up my Part 1A here, and you can take a pen or a highlighter and make a mark down the side of the page like so, so that you should be able to use that almost like a bookmark. This is new guidance from the examiners in terms of marking the legislation. They have just recently announced that students can also tag the legislation. So I've put in some pictures there of index flags. So the examiners have said you can use those index flags, again, as bookmarks to mark your legislation. They have made it very clear, though, that you're not allowed to write on those flags. So it will be useful in terms of finding things, but you can't actually mark what it is that you're looking for. What the examiners have also said is that you cannot use post-it notes, just the index flags, to mark up your legislation. The other new guidance is that you can fold pages. So again, this is, I suppose, another alternative to a bookmark kind of approach, where you can literally take the page and you can, from the bottom or the top, just fold it up so that you can find it easily. The other thing that you can do is highlight the legislation. And of course, you can use a whole range of colours. And I know now, and I've seen my students in the classroom have got a whole range of pastel colours because the paper's quite thin. So you can really enjoy yourself highlighting in colours. And I'll talk to you about that later on. Please be careful to note, though, any annotation in the legislation is absolutely forbidden, and it will disqualify your legislation from use in the exam. So yes, you can put your name on the front, but that is it. Please do not write in the legislation that you want to take into the exam with you. Rowan, I haven't said this already. These rules don't apply to the added exams yet. I'm guessing that that might change, but for May 2020, the rules that I'm talking you through about marking the legislation applies just to the ATT and CTA exams. As far as I'm aware, the Institute will make a formal announcement of this in the newsletter that's coming out in the spring. So I'm guessing it's coming out very soon in March. Miglena asks a good question. You can use old legislation. So you could, as Miglena is suggesting, take in 1516 legislation. That's quite an old set of legislation, which means anything subsequent to Finance Act 15 won't be included in your legislation. And of course, the newer the rules are, the more topical they are, and that means they're more examinable. So I would suggest, ideally, that you do take in a current set of legislation. That will be the most helpful to you in the exams. Margarita, you ask a very good question. As I said, this information is brand new to us. What the examiners have said is that the narrow flags, similar to the picture that I drew up, the picture that I copied onto the slide, is acceptable, but they don't want the wider post-it notes. I'm guessing that's probably because it is harder for them to check if you put big post-it notes in whether or not you've written on them, and that's absolutely prohibited. So I would suggest stick with very narrow flags like the ones in the picture, and you'll be safe. Simon, yes, you can use a pen, just like I've done, to underline or indeed sideline, like so. That's absolutely fine. So pens are allowed, but annotations writing isn't allowed. Right. I think I'm going to move on. I will, as I said, give opportunity for more questions at the end. Otherwise, we're going to end up going quite slowly. Right, so let's have a look at the agenda for this evening, if you like. What am I going to talk to you about? Firstly, there are lots of volumes of legislation. I want you to have an idea of what is in each volume. I also want to be able to talk you through how useful the contents pages are going to be to you. And we'll then at the end have a word about whether or not it's a good idea to rely on the index. So that's our plan of action for this evening. So let's start with what's in each volume. Now, there's two types of legislation. There's the primary legislation, and this is the law that goes through the Houses of Parliament to get royal assent. And then there's the secondary legislation, which we'll come to in a minute. Now, for the three main taxes that you're likely to see in the exam, income tax, corporation tax, and capital gains tax, the primary legislation is in parts 1A to 1C. For the fringe taxes, if you like, inheritance tax, national insurance, VAT and stamp taxes, the primary legislation is in part 3 for IHT and NIC, and VAT is contained in the Orange Book Part 1, stamp taxes in the Orange Book Part 2. The secondary legislation now is different type of legislation, doesn't require royal assent like the primary legislation. And for the main taxes that you're likely to see in the exam, income tax, corporation tax and capital gains tax, the secondary legislation is contained in 2A and 2B. 2A includes statutory instruments, which is probably not going to be as useful to you as what's in Part 2B. Part 2B includes things like statements of practices, extra statutory concessions, inland revenue interpretations. These are all written in nice, easy to understand English, and they are much easier to follow and can give you some really useful information for the exam. So we'll talk more about that later. For all the other taxes, the more fringe taxes, you'll see the primary and the secondary legislation are all in the same book. So That gives you an overview of what's in each book. How are we going to find our way around parts 1A to 1C, the primary legislation? So, for income tax, corporation tax and capital gains tax, the primary legislation will be in 1A to 1C in chronological order. So starting with the earliest acts in 1A, finishing in 1C with Finance Act 2019. Let me just show you my 1A legislation. You can see there's these big grey blobs of shading. Those big grey blobs denote the key statutes for the exam, or what we refer to as the Consolidation Acts. The Finance Acts have been consolidated into 7 main acts for income tax, corporation tax and capital gains tax, and those are denoted by those grey shading. In between the grey shading, there are some Finance Acts and minor statutes that weren't included as part of the consolidation process. And chances are you probably won't need to refer to those too much. So let's start with income tax, and let's think about how and where we're going to find things in the legislation that's going to be useful to us. The best way to think of this is to have a look at a pro forma income tax computation. I've put at the top of this pro forma employment income. Now, if I want to find any information or rules to do with employment income in the legislation, I will refer to ITPA 2003. ITPA stands for Income Tax, Earnings and Pension Act. So anything to do with employment income will be included within ITPA. And that act was consolidated in 2003. So in ITPA, I will find all the rules on taxable benefits and exempt benefits. The rules on termination payments, etc., are all included in ITPA. Next in my income tax computation, I've got the other sources of income. So I've got trading income, property income, interest and dividends. If I want to find out the rules on any of those, I will look into ITOIA, which was consolidated in 2005. ITOIA stands for Income Tax, Trading and Other Income Act. So that will include all the rules to do with trading income and other income. So the rules to do with adjustment to profits for sole traders, the rules to do with basis period rules, current year basis, opening year rules, and so on, as well as the rules on partnerships. So ITPA deals with everything to do with employment income. ITOIA deals with everything to do with every other source of income. And then the last act you should be familiar with is ITA, Income Taxes Act 2007. And that deals with everything else in respect of income tax which doesn't specifically relate to a source of income. So for example, if you want to look at what types of payments are deductible, so things like qualifying interest on loans, the rules on those are in Income Taxes Act 2007. The rules on tapering personal allowances for people with high levels of income is included in ITA 2007. Looking at the rest of the income tax computation, all the rules on extending the bands because of gift aid donations are included in ITA, and all the rules on tax reducers are also included in Income Taxes Act 2007. So we've seen our 3 main acts for income tax: ITPA, dealing with employment income; ITOIA, dealing with every other source of income; and Income Taxes Act, which catches everything else. So here are a couple of questions for you to see if you've understood where we're at so far. So on the left-hand side, if you want to look up the rules on share schemes, where would you look? And on the right-hand side, if you want to look up the conditions that need to be met for a property to be considered a furnished holiday let, where would you look? Okay, I'll run through the answers. Please feel free to change your mind as I talk you through the answers. And that reassures me then that we're hopefully all going to come up with the right one. Okay, so the rules on share schemes to start with. Share schemes, what I'm looking at there is where an employee is being provided with shares or share options in their employer company. So what we're looking at here is something to do with employment income. It will be some sort of benefit that is provided to the employee. So remember, everything that is to do with employment, we're going to find the rules in ITPA, in Income Tax, Earnings and Pensions Act. And I think we're pretty much all there in agreement on that one. Good, well done. When it comes to furnished holiday lets, that is a specific type of property income. So we're not going to look into ITPA for that because that only deals with employment income. Where we want to look for this is it's a different source of income, which isn't employment income. So, and again, I think we're almost all there, we're going to look into ITOIA. Income tax, it's not trading income, but it is other income. Good. So it looks like we're all pretty much on track with that. So let's now have a look at the main acts that are relevant to corporation tax, to companies. So I'm going to keep moving through my slides, and next we're going to have a look at a pro forma corporation tax comp. I've just seen your comment, Chris. You can redeem yourself with the next polls. Okay, so we're all going to focus really hard on this one. So the pro forma corporation tax comp. In the start of the tax comp, what have we got? We've got the trading income for the company, and then we've got non-trading loan relationship income, property income, IFA income. If we want to find the rules on any of these sources of income for the company, we are going to look in CTA 2009, Corporation Taxes Act 2009. So in CTA 2009, we're going to see all the rules on adjustments to profits for companies. And it will also give us the rules on when an accounting period starts and when an accounting period ends. It gives us the rules on loan relationships. CTA 2009 will give us the rules on IFAs because these all relate to a specific source of income for the company. CTA 2010, which is the other main Corporation Tax Act, deals with everything else which doesn't specifically relate to a source of income. So, for example, if the company has losses, CTA 2010 will tell us the different options that are available to the company for relieving the loss. If you're looking at the rules on purchase of own shares, for example, that will be covered in CTA 2010. So, here you go, Chris and everybody else. Here is another couple of questions for you. If you want to look up the rules on R&D, research and development, where you're going to find that. And if you want to look up the rules on close companies, where would you look? Joe, please remind me at the end of the session, and I can save my annotated slides and upload them for you to download. So yes, I can do that for you. Maris, I will talk a little bit about VAT, not a huge amount. Okay, so as before, I will try and explain the rationale behind where you should be looking. And you're going to change your answer if you feel you want to, so that I can see that you're getting the right idea. Okay, so first question was a little bit tricky. So I asked you where you're going to find the rules on R&D for companies. Now, if a company is undertaking qualifying revenue R&D expenditure, it's going to be entitled to take a bigger deduction for that expense when it comes to calculating its trading income. So the relief that's available for the company is a relief from its trading income. So R&D relates specifically to a source of income for the company. And if that's the case, we should be looking in CTA 2009. So CTA 2009 looks at all the different rules on income for a company, whereas CTA 2010 covers everything else. So I'm glad to see now that I think we've got a resounding 100% of you agreeing that the rules on R&D are going to be in CTA 2009. Now, moving on then, the tax implications of close companies. So here we're looking at, for example, where a close company makes a loan to a shareholder, and there are all the rules about the company having to pay this penalty tax. Now, that doesn't specifically relate to a source of income, so that will be covered, as the majority of you seem to agree, in CTA 2010. That's the one that covers everything else. Just to reassure you, the session that I'm doing now is being recorded. It will be put on the Tolley Academy. So if you've missed bits of it, or if you enjoyed it so much you want to watch it again, then by all means you can. Right, let's keep going. So let's just remind ourselves of where we're at so far. What we have seen so far is, with regard to income tax, we've seen there are three main acts: ITPA covering employment income, ITOIA covering every other income, and ITA, which is the catch-all for everything else. For corporation tax, there are two main acts: CTA 2009, which covers all the various different sources of income for a company, CTA 2010, which covers everything else. There is one other act for companies. I've graded out because it's unlikely that you will need this act. This is TIOPA, Taxation of International and Other Provisions. And that, as the name suggests, the international bit covers things like CFCs, transfer pricing, and so on. So probably only going to be useful to you if you're doing the TMC paper. What I haven't mentioned is two other very important acts. There's all the rules in respect of capital gains, which are included in Tcga, Taxation of Capital Gains Act, which was compiled in 1992, and the Capital Allowances Act, which was compiled in 2001. So there we have our 7 main acts. And that hopefully is a useful little reminder for you of the areas that you might be referring to. So, having understood where you're going to find the rules for the primary legislation in volumes 1A to 1C, hopefully now you feel a little bit more confident that you can start studying with the legislation. But a word of warning, don't start highlighting straight away. You don't want your legislation to just be a colouring book. What you want to do is make sure that you're highlighting the things that you really need for the exam. So think about what is in the syllabus for the particular paper that you're doing and what rules you absolutely need to highlight. And then think of the things that will be particularly helpful to you for the exams in terms of saving you having to memorize lots of conditions, limits, and so on. And what we're going to start talking about is highlighting the contents page as well as the statutes. And that certainly will have save you having to remember different statute numbers. So let's start with highlighting the contents page. We might find that that's all you need. So, question for you on the left-hand side. If you want to look up the options available to a sole trader for relieving a trading loss, where would you look? I can see again, this is a bit of a tricky one because we're looking at a trader who's got a trading loss. So I can see why a lot of you are thinking about ITOIA. ITOIA relates to all the various different sources of income though. And this isn't going to be a source of income. We're thinking about how our trader can get relief for his loss. So I think some of you are changing your mind now, and you're correct too. Where you should be looking is in Income Taxes Act. So that's going to be our starting point for highlighting the contents page. So let's have a look at ITA 2007. We're going to have a look at an extract of the contents page. Very often in an exam question, be it in ATT paper 2 or perhaps in CTA in the owner managed business paper, you might be given a scenario where you've got a sole trader who's got a loss, and the question asks you, what are the options available to the sole trader for relieving his loss, and then advise him on the best option. So, in terms of making sure that you have a clear checklist of the various different options available, the contents page can be tremendously helpful. So the contents page will hopefully remind you about Section 64 relief. That is the loss relief available to the trader where he can set his loss against his general income of the current tax year, the year in which the loss arises, and or the previous year. And then, if there is still loss remaining, there is the extension to Section 64, which allows the trader to set his trading loss against capital gains in either the current year and or the previous year. Or we have the do nothing option. If the trader doesn't make a claim for relieving his loss, then it will automatically be carried forward and set against future profits of the same trade under Section 83. You might remember that there are some very specific loss reliefs that are only available in certain situations. If we've got a trader who's just started to trade and has a loss in any of his first 4 years of trading, then Section 72 relief is available to him and he can carry back his loss 3 years against general income. So that's a more generous relief than the Section 64 relief. If we've got a trader who has a loss on cessation of trade, then he can carry back that loss under Section 89. The Section 89 relief allows him to carry back the loss 3 years against trading profits. If he's got a loss on cessation because he's about to incorporate his sole trade business, then that loss can be carried forward against future income from this newly incorporated company. So you can see that just by highlighting the contents page, I've got a neat little checklist here of all the various different loss relief options that are available to a sole trader. And you can see that by doing it in colour, I've put the main loss relief options in yellow, and in green, the loss relief options that are only available in specific situations. So, armed with that information, here is a question coming up for you. If our sole trader is just starting to trade, which loss relief options would be relevant to him? So, this is a multiple response question. There is more than one right answer. And use, by all means, what I have highlighted in the contents page, as you might do in the real exam, and think of all the various options that could be relevant to him. Margarita, I can see your question there. No, that there is only just one webinar to cover using the legislation in general. Though if you are coming on a course at Tolley on TMC, the tutor there will talk you through useful legislation references specifically for your paper. As with all the papers, whenever we teach, we will go through and say specifically useful things to look at. Okay, I'm delighted with these results. Let's just have a quick run through, and as always, change your mind. As I introduced it, the ones that I've highlighted in yellow are the ones that are available to pretty much all traders. Section 64, setting the loss against current year and or prior year income, extending against gains via Section 71, and Section 83, carrying forward the loss, will all be relevant options for him. What he might very well want to do is carry back his loss 3 years, which he can do if he's just started to trade under Section 72. What won't be relevant to him are Section 86 or Section 89, because they specifically are targeted at traders who are ceasing to trade. Section 89 is permanent cessation of trade. Section 86 is where someone is ceasing to trade as a sole trader because they are incorporating their business. So all but the last two options would be relevant. Right, we're going to keep moving, and the next thing we are going to have a look at is the contents page with regard to exempt benefits for an employee. So before I tell you where we're going to have a look, you're going to help me out and tell me in which act am I going to find the details on exempt benefits. So we're looking here at exempt benefits that might be provided as part of somebody's employment. I've given you a bit of a clue in the question there. And it looks like you pretty much all agree that it is ITPA. So remember, we're looking at something that relates specifically to somebody's employment. So we're going to look at ITPA, which is Income Tax, Earnings and Pensions Act. Good. So if we turn to the contents page of ITPA, we will see within Chapter 11 there is a long list of exempt benefits. Now, very often in the exam, if you're doing ATT paper 1 or paper 3, or you're doing CTA individuals, you might be asked to do an income tax computation for an employee, and you'll be told about their employment income, and you'll be told perhaps they got salary and they've got various different benefits, some of which might be taxable, but some of which might be exempt. Now, in our study material, we do give you some nice, good, full lists of exempt benefits, but you don't want to have to remember them and remember all the details associated with them. So again, just highlighting the contents page can be tremendously helpful. So looking at the extract that I've put on the slides for you, remember there's a childcare exemption. So for example, if there is a creche or a nursery on site provided by the employer, that's a tax-free benefit. If the employer provides childcare vouchers, that up to certain limits is a tax-free benefit. Section 319 covers mobile telephones. Again, another tax-free benefit. What you'll find when you look into the detail in Section 319 is that actually it's only one phone per employee that's a tax-free benefit. The second phone, if an employee is provided with 2, will be taxed on him. And you don't need to remember any of that because you'll have highlighted this in the contents page. And if you need that level of detail, you can dip into the statute and find Section 319. Trivial benefits provided by employers is also a tax-free benefit. So a trivial benefit is one where the cost to the employer is less than £50, and it's not a benefit which is provided as a reward for services. So if I was given flowers on my birthday, that would be a tax-free benefit covered by this exemption. Then we've also got in Section 323 long service awards. Now I've put a poll on this at the bottom of the screen. Have a go at answering that. And don't worry if you don't know the answer. I'm asking you what conditions must be met for a long service award to be an exempt benefit. And again, you can choose more than one option. Chris, I'm just smiling at your comment in the chat box. I'll try and give you a bit more time to change your answers before I broadcast them. So this one, actually, I'm not too fussed what you put because they're all correct in their own way. A long service award cannot be more than £50 per year of service, up to 20, and can be, what we mean by long service is the employee must have had at least 20 years of service. Now, I sadly enough do remember that rule because I've taught it for so many years, so it's just stuck in my mind. But I'm more than happy for you to tick the last option. I don't know, but now I know that I've highlighted this in the contents page. I know there is such a thing as a long service award exempt benefit, and the detail I will find, if I need it, in Section 323. And when you do go into the detail in Section 323, you really only need to highlight the key phrase, so 20 years, £50, and then it should all jump out at you should you need it in the exam. Okay, so that's how useful the contents page can be. What we're now going to move on to have a look at, and let's get up to the big screen here. What we're now going to have a look at is that sometimes we will find that just the contents page isn't always going to be enough. Sometimes we will need to look into the actual sections because we're going to need some more detail. So before we do that, here's a question for you. If you want to look up the rules on EIS relief, so somebody has, oh, sorry, Let me find that for you again. There we go. If you want to look up the conditions for EIS relief, so somebody has subscribed or they want to subscribe for shares in a company and they want to know whether they're going to get a tax reducer as a result of this subscription, where would they look, please? Oh, you're doing stormingly well with your answers. We're really managing well now. So we're looking here, just to remind you, so you've got your last chance to change your mind, at somebody who has subscribed or is about to subscribe for shares in a company, which they think will have EIS status. And as a result, they're going to get tax relief, a tax reducer on their subscription. So we're not looking at anything that relates to employment income. So we're not going to be looking in ITPA. We're not looking at anything that relates to trading or other income. So we're not going to look anywhere in ITOIA. Where we're going to look is the other act, which includes all the other rules to do with income tax. And we're almost all there by agreeing that that's in Income Taxes Act. Okay. So let's have a look at how Income Taxes Act is going to help us. Some of you may be aware that there are lots of different conditions that must be met for EIS relief to be available. We need to have a qualifying individual who has to be subscribing for ordinary shares in a qualifying company. And the conditions for a qualifying individual are quite long and detailed. The conditions for a qualifying company are probably even longer and more detailed. So this is the sort of thing where if you are studying for CTA individuals paper or some of the ATT papers, you'll want to use your legislation, so it saves you having to remember all the conditions. So what I'm going to do now is ask you a question, which again, I'm not necessarily expecting you to know the answer to now, but as we go through the legislation, hopefully you will get to the right answer. So this could be a scenario that's presented to you in the exam. What have I put there? My client has just set up a property development company. He wants to know whether his friend can claim EIS relief if he subscribes for the shares in this company. So what we're trying to establish here is whether this company is a qualifying company for the purposes of EIS relief. So I'm going to leave this question up as we look into the legislation to try and identify whether that's the case. So let's go into the legislation. We've agreed that we're looking at Income Taxes Act. And specifically, we're going to look into Chapter 4, so we can have a look at the requirements that must be met by the issuing company. So let's go into Chapter 4. Sticking within the contents page, here is an extract of the contents page that cover the rules for an issuing company. So let's do a little bit of highlighting on what we've got in front of us so far. So we know the company's got to have a UK permanent establishment. We know the company's got to be a trading company. We know a little bit more than that the company can't just be trading, it's got to have a qualifying business activity. The company also must be unquoted. And then we've got the gross assets requirement and the number of employees requirement. The company can't be too large, can't have too many assets or too many employees to qualify for EIS status. Okay, so I want to establish now, using Section 183 as my starting point, what is going to be a qualifying business activity for the company. So I'm going to dig a little bit deeper into Section 183 and see what that tells me. So here we go. I've got Section 183 open in front of me. And what does Section 183 say? It says, when we're looking at a qualifying business activity, it's got to have a relevant qualifying trade. Now, that's not really giving me much extra information. So I'm going to go further into the legislation, see if I can find anything more useful. So I'm going to look into section 189, which talks about the meaning of a qualifying trade. You'd have thought that would help. But what does section 189 say? It says that it must not carry on any excluded activities. So still, I'm none the wiser. But I'm going to keep going. And then eventually I will find section 192. Section 192 talks about the meaning of an excluded activity, and indeed gives a long list of excluded activities. So things to do with banking, insurance, finance are excluded activities, as are legal or accountancy services. Also, anything that's heavily asset-backed, like property development or farming and market gardening, are also considered excluded activities. So have another read through of the poll and have a think about whether or not you might want to change your answer based on what we've just looked at together. Or indeed, if you haven't answered, you might want to have a go now. So we're looking at somebody who's subscribing for shares in a property development company, and he wants to know whether EIS relief is going to be available to him. And I'm delighted to see that the legislation has helped you out there. And we are pretty much all in agreement that EIS relief is not going to be available. And the reason it's not going to be available is because property development is not a qualifying trade. It's there in section 192 as an excluded activity. So well done everyone on that. But what you're seeing here is that the legislation does have all the answers, and the contents pages can be tremendously useful, but sometimes you do need to dig a bit deeper. And you don't want to be doing this digging in the exam. You want to, if this is something that is examinable in the papers that you're sitting, you want to have done the highlighting in advance so that you will be able to find it and answer the questions as appropriate. Whilst we're looking at the conditions for a company to achieve EIS status, let's just have a look at the gross asset requirement. We saw that in the contents page. It's covered in section 186. Again, let's just look very carefully at how we're going to highlight this. We're going to highlight the words not exceed £15 million before the share issue. And then we're going to highlight must not exceed, that's all right, must not, actually better to highlight this bit at the bottom, not exceed 16 million afterwards. And there you go. If I highlight it correctly, the key phrases, the key condition in terms of the gross assets requirement is jumping out at me. So if I need to check that in the exam, I should be able to do that quickly and easily. Okay, let's think next about not just highlighting key words, but let's think in more detail about highlighting in different colours. So using highlighting as a signpost, for example. So we're going to talk about capital allowances now. So capital allowances is going to be relevant to anyone doing ATT paper 2 and paper 4, as well as anyone doing the OMB or TMC paper. So capital allowances are available in respect of plant and machinery. Remember, it's the equivalent of depreciation, but using fixed rates and fixed rules. So what we first need to understand is what is considered plant and machinery for capital allowance purposes, because it's only plant and machinery that is going to be entitled to this relief. So the beginning of the Capital Allowances Act is going to be helpful to us, because what we're going to see there is section 21 tells us the definition of a building. Anything that is a building or a part of a building is not considered plant and will therefore not qualify for capital allowances. So I'm underlining, or you can highlight in red, red meaning stop, meaning no plant and machinery, no capital allowances. Similarly, section 22 has a list of things that are considered structures for tax purposes, and structures, again, are not plant, so capital allowances will not be available for those. So anything that I'm highlighting, anything that I'm highlighting in red is bad news, if you like, and that's telling us that capital allowances are not available. But anything that I'm highlighting or underlining in green is good news. So section 23 has the good news, because that's got a list of items that look like they're part of a building or part of a structure, but they are actually considered plant for tax purposes, and therefore capital allowances are available. So here is another question for you to ponder as we look into the details of sections 21, 22 and 23. So here's my client again, different one this time, just bought some office space and wants to know whether the following items will qualify for capital allowances. And I've asked you there to tick which items qualify. And what you'll see is that you can tick more than one item. So this is a multiple response question. And again, what I'm going to do is just leave that question up on the side of the screen. Feel free to change your answer as we go into sections 21 and 23. So starting with section 21. Section 21 tells us what is a building. And as you can see, I've pre-highlighted, if you like, the fact that parts of a building don't qualify as plant and machinery, and therefore capital allowances aren't available. Notice we've got here list A, which gives us a list of assets which are treated as being part of a building. So in there we've got, and we're going to highlight this, remember, in red or underline in red, we've got walls. Those are part of a building. Stairs are part of a building. Shafts or other structures in which lifts, hoists and escalators are installed are all part of a building. So I'm just highlighting a few key examples of what's part of a building, and that might help you to change your mind when you're looking at the question on the left-hand side. We're going to keep going though. So I'm going to keep the question up whilst we look next at section 23. Remember, section 23 was the good news section. This is the section which includes items that look like they might be part of a building, but they actually are treated as plant and machinery for tax purposes. So we've got thermal insulation that we're referred to in section 28. We're referred to section 33A, which includes a list of integral features. Integral features would be, for example, and you'll find this in section 33A, air conditioning units, escalators, moving walkways, lifts. Those are all integral features, but they are treated as plant and machinery and will qualify for capital allowances. And if we move on within section 23, there is a nice list there, list C, which gives us a list of items that look like they're part of the building, but actually are treated as plant and machinery for capital allowance purposes. So let me just draw your attention to items 13 and 14. Item 13 is partition walls. Now, we saw in section 21 that walls are part of a building and should therefore not qualify as plant and machinery. But what section 23 tells us is if they're movable and intended to be moved in the course of the qualifying activity, so in the course of trade, then capital allowances will be available. So, for example, in your office, you might have some of these dividing walls that can easily be moved and often are moved as there's restructuring and people are sitting in different groups. That would qualify for capital allowances. Similarly, decorative assets. There may be a painting or a mural up in your the building that you work in. Will that be eligible for capital allowances? Well, item 14 tells us it will do if it's provided for the enjoyment of the public, but only in a hotel, restaurant or similar trade, because then it's deemed to perform a function in the trade, the function being to create a nice ambience for the customers. So a mural or a painting in an office would not qualify for capital allowances, but one in a hotel or restaurant would. So going back to my question here, my client is just bought some office space. He wants to know, well, let's start at the bottom, whether these items will qualify. So he's bought a painting to hang in the reception area. Because he's built or just bought an office space, which isn't a hotel or a restaurant or something similar, that painting will not qualify for capital allowances because it won't be treated as being covered by item 14. So the painting won't get qualifying at capital allowances. So if you want to change your answer, do so. Stairs. We saw that won't qualify for capital allowances because that's part of the building. That was listed in section 21. But escalators, which seem like they're going to be part of the building, they are an integral feature to the building and they will qualify for capital allowances, and the integral features are all listed in section 33A. Shafts to install the escalator, that's treated as part of a building. We saw that in section 21. And partition walls, well, that's a funny one, isn't it? Because if it's a regular wall that can't be moved, then it's part of the building and won't qualify as plant and machinery, and capital allowances won't be available. But if the partition walls are movable and intended to be moved in the course of the business, we've just seen that item 13 of list C here in section 23 says that it will qualify. So this just goes to demonstrate that sometimes the questions that you see in the exam, you can't just give a definite yes or no answer. With regard to the partition walls, you'll need to qualify your answer by explaining whether or what types of partition walls will and won't qualify. So in answer to that question, partition walls might qualify if they're movable. Escalators, as you correctly agreed, qualify as integral features. So as you can see, it really isn't that simple, but with the legislation, it's a lot easier. Whilst we're talking about capital allowances, let me just talk you through some new legislation on structures and buildings. Chris, and this applies to everybody else who's feeling a little bit a bit like Chris. He's asked, is the shaft not... So let me just go back to Chris's question. Is the shaft not capital expenditure for the installation of plant? Let me remind you of what we saw on shafts. Let me just take you back. Here we go to list A in section 21. Item number 5 there, I've underlined shafts or other structures in which the lift is installed is treated as part of a building and won't qualify. But the escalator itself will qualify because that's an example of an integral feature. So the shaft won't, but the escalator will. I hope that clears up any confusion. But I know I'm going through these bits of legislation very quickly. This is what you need to take your time doing, and doing lots of questions using our study manuals and question banks to help you. Okay, let's have a look at structures and buildings allowance. You might be aware, if you're doing paper 2, paper 4 for ATT, or owner managed business paper for CTA, that this is a new piece of legislation that was just introduced in Finance Act 2019, that certain buildings which are non-residential will qualify for this structures and buildings allowance if construction begins on or after 29th of October 18. When you look into our study material, we do include quite a few legislation references to Capital Allowances Act. But when you open up Capital Allowances Act, you will find, or you won't, I should say, find those rules there. The reason for that is quite simply that the legislation was published before the statutory instrument enacting these new rules were available. So just because of the deadlines for publishing, the rules didn't get included in the legislation. Now, the examiners are aware of that, and both the ATT and the CIOT have confirmed that they will make sure that they don't test you on anything other than what's in your manual, so on nothing else that's not in the manual but just in the legislation, because they know that you won't have it in the legislation that you take into the exam with you. So you can just rely on what you've been taught from your study manual and what's in the tax tables. So hopefully that will put your mind at rest on that one. Okay, let's move on. Let's have a quick word about VAT. So I was asked about that. Some of you might be doing the VAT paper for ATT, or perhaps for CTA, you're looking at the VAT awareness paper. Now, remember I mentioned to you, with VAT and indeed the other fringe taxes, the primary and the secondary legislation are all in the same book. So for VAT, we're looking at Orange Book Volume 1. The Act itself is fairly small. It's only about 100 sections, split up in the following categories that I've put up on the slide. You might find the schedules particularly helpful, and indeed Schedules 8 and 9 can be very useful. Schedule 8 gives a list of all items which are zero rated for VAT purposes, and Schedule 9 gives a list of all the items that are exempt for VAT purposes, leaving everything that's not covered in either Schedule 8 or Schedule 9 to be treated as standard rated. So schedules can be quite helpful, and also the statutory instrument. So this is a bit of the secondary legislation that's included in this book. Statutory Instrument 1995-2518 has got some really useful rules on partial exemption, on capital goods schemes, and on all the various different accounting schemes that small businesses can be part of. So cash accounting, annual accounting, flat rate scheme, all of those rules are in this statutory instrument. There are lots of different regulations in that statutory instrument, so I recommend again highlighting the contents page first, and then you can dip into the detailed regulations if and when you need them. So I've included a few slides here on just the key contents of the main acts. This is really more of a takeaway for you, so that when you're starting to look through your legislation, you've got a good idea of what's included where. So we'll run through these just in overview. Starting with the earliest act first, Tcga, Taxation of Capital Gains Act. All of the CGT reliefs, like rollover relief, incorporation relief, and so on, are all included in this act. Capital Allowances Act 2001, we've already seen section 21, 22 and 23, which help us with the definition of plant and machinery. And we've made a mention of section 33A, which has a list of integral features. The rules on annual investment allowance are also included in there. ITPA, we've talked quite a lot about. That's got all the rules to do with employment income, in particular benefits, taxable and exempt, and we've mentioned share schemes too. ITOIA, remember, includes all the rules on trading income, so that will include sole traders as well as partnerships. ITA includes everything else to do with income tax, which doesn't specifically relate to a source of income. And we've already seen loss relief options are all in ITA, as are the rules on tax reducers. Now, there are some parts of the legislation that you might want to refer to that aren't included in one of the main consolidated acts. And in particular, if you need to look up the rules on penalties, then you will have to go into some of the individual finance acts. So Finance Act 07, 08 and 09 are particularly helpful for the rules on penalties. And that will give you all the different conditions and percentages and so on, and save you having to memorize. Then moving on to the Corporation Taxes Act. Remember, 2009 covers all the rules on the various different sources of income for a company. So loan relationship rules, IFAs, R&D. And Corporation Taxes Act 2010 covers everything to do with corporation tax that doesn't specifically relate to a source of income. So hopefully that's a nice recap with a bit more detail there for you. Let's talk a little bit about the secondary legislation for income tax, corporation tax and capital gains tax. So I mentioned earlier that Part 2A of the Yellow Books, that includes statutory instruments. Part 2B, I said, is probably going to be more helpful to you. I mentioned that includes statements of practice. If you are doing the OMB advisory paper for CTA, and if you're doing ATT paper 2, I believe, then you would need to know the rules about partnership capital gains tax. And that is covered in Statement of Practice D12. And that explains in nice, easy to follow English how the rules work. If you're doing paper 1 for ATT or individuals paper, you might have learnt about PAYE settlement agreements. So that's where an employer provides perhaps an ad hoc or irregular benefit to an employee and agrees to pay the tax on their behalf. That's called a PAYE settlement agreement, and examples of the types of benefits that can be the subject of a PSA, and indeed how to work out the tax, is included in Statement of Practice May 96. Within Part 2B, you've also got revenue interpretations. RI 228, Revenue Interpretation 228, gives you the meaning of a trading company. That's particularly helpful when you want to identify if a company is trading for the purposes of claiming entrepreneurs relief or gift relief. There are some useful HMRC briefs and codes of practice all in Part 2B as well. Some of those codes of practice give you more information about penalties. And extremely useful for anyone doing anything to do with overseas aspects of income tax and capital gains tax is RDR3. RDR stands for Residence, Domicile and Remittance. And that gives you all the rules on statutory residency tests and all the rules on splitting tax years, which saves you having to memorize a tremendous amount of conditions. So RDR3 is really useful. As is IR35, that's all the rules on personal service companies, and that's also included within Part 2B. And FRS 102, surprisingly, is included in there too. I say it's surprising because FRS is a financial reporting standard. So actually, not really tax related, but it is included because some of the tax rules follow the accounting rules. So for example, if a provision is allowable as per FRS 102, then it is tax deductible. So it's useful to have that highlighted in your legislation. Oh, and a quick word there about part 3. That includes the rules on NIC, and in particular, this statutory instrument is helpful when you're looking at the NIC maxima rules. If, for example, you're dealing with somebody who's got 2 employments or they're employed and self-employed. It goes through all the different steps and explains to you how to calculate what is the maximum amount of NIC they should be paying. Okay. We've not got much further to go because we've spent a lot of time talking about what's in each of the different books and particularly how the contents page can be very helpful. We've dipped into some of the sections, the statutes themselves, and looked at how useful they can be and how we can highlight in different colours to help ourselves. Let's have a quick word about the index then. So, Book 1C includes the index for the primary legislation. And there's 2 parts to the index. There's your normal index, as you'd expect, and also a words and phrases index. Now, I put there that the index is not overly useful. It might be able to help you out if you're desperate. So, here's a question for you. I want to look up the rules on personal service companies. I haven't found it in the contents page. I'm in the middle of the exam. I'm going to use the index to help me. So tell me, what should I be looking for in the index to try and find the rules on personal service companies? I'm going to broadcast the answers. So you can see that you all had different ideas. Funnily enough, no one thought about looking up relevant engagement, but all of you thought of looking up something different. If you use the index, and you can have a go at doing this, and you look up personal service company, you'll see it's not there. If you look up IR35, you'll see it's not there either. If you look up deemed employment income, it's not there either. It's in the index as intermediary. So not necessarily the most obvious place, clearly, gauging by what you've written there. So the index can help, but we don't want to be over-reliant on it. Okay, so in terms of summarising, the golden rules of highlighting. Less is better than more. As I've already talked you through, just the odd word, number, phrase is going to help you a lot more because it will jump out at you rather than if you've just used your legislation as a colouring book. Before you start highlighting, just make sure you are highlighting what's relevant to your syllabus. So perhaps have done some question practice to give you an indication as to what you need to know. We've talked about highlighting the contents page. I think that's tremendously helpful. Again, consider highlighting the index, but I don't think that's going to be as helpful as the contents. We've talked about using different colours when we were looking at capital allowances. And bear in mind, your time is limited. The time that you've got to prepare yourself for the exams, you've got to spend in the most productive way. And a large part of that time, I hope, will be spent by you doing question practice. The more questions you practice, the better prepared you'll be for the exam. You don't want to be spending all your study time highlighting the legislation. So highlight it carefully for the things that are going to be most useful to you. in the exam, you won't have time to look everything up anyway. So be careful that you do spend your study time wisely. I'm going to just end off with some of the examiner's comments with regard to using the legislation. What the examiners have said specifically about when you should be using legislation references in your answer and when you don't need to. What the examiners have said is if there is a question which simply requires an explanation, so the phraseology of the requirement might simply be explain whether or not capital allowances are available on each item. Then essentially you're writing to the examiner, and then you can and should, if you know them, provide legislation references. If you are writing to a lay person, so if you are writing to somebody who's a client and they're not going to know anything about tax, then the examiners will not expect you to use legislation references. The idea being that when you write to the client, you want to take what's in the legislation and explain it to them in simple enough terms that they shouldn't need to look it up themselves. So when you're writing to a client, you don't want to be using legislation references. But if you are writing to a tax partner rather than a client, then the examiners have said tax partners should be familiar with the legislation, and so you can, and if you do know, should put legislation references in your answer. Final comment here by the examiners. Students simply copied out the legislation, and that would not have been valued by the client. Just copying out or paraphrasing conditions, for example, that are in the legislation is not going to earn you enough to pass a question. What you need to do is take what's in the legislation and apply it to the scenario presented to you, which is what I was trying to demonstrate to you throughout this presentation. So we had a client who wanted to know whether his subscription for shares would qualify for EIS relief. We had a client who wanted to know if his various items of capital expenditure would qualify for capital allowances. It's not good enough just to copy out the legislation. You need to find the relevant bits of legislation to help you and then relate it to his scenario. So legislation is hugely helpful, but you've got to be able to understand it and then use it to provide advice. And lastly, be careful. There are lots of volumes, as you can see, and for those of you who've got your legislation already, you'll know they're fairly heavy as well. So be careful, get yourself a wheelie suitcase so that you can use that to carry your legislation into your courses when you need it and into the exam as well. And finally, look after your books. Remember, the legislation that you take in can't have any annotations or writing in it other than your name. So once you've got your legislation, look after it carefully. If you want to tag it with the index flags, you can do, but again, make sure that you don't write on those index flags. So hopefully now you're feeling a little bit more confident about using the legislation than you were before we started. That's the end of my formal presentation. I've put up the slides there for you to download. What I can do now is take the slides that I've just highlighted and scribbled on, and I can upload those as well, so you can take a copy of those too. And in the meantime, I've put a last question there for you to have a go at. And if any of you have got any questions, I've put my email address there. I've put our exam training details there as well. I'm going to end the presentation at this point. If you do have any questions, I will stick around for a bit longer, so you can put them in the chat box and I can help you out. But I know with me anyway, I'm the sort of person who thinks I've got no questions and then all of a sudden something dawns on me afterwards. So you've got my details, you can get in touch afterwards. But thank you very much all for interacting so nicely with the polls. It makes it a lot more fun for me and hopefully a lot more interesting for you as well. So thank you all very much. I'm going to now, as I promised, save this and I will upload it. So bear with me whilst I do that if anyone wants a copy of it. And hopefully, if you give me a second, it will come up pretty soon as I do this. There we go. So there's two versions there for you to download. One of them says using the legislation 2020, and I think I've saved it as February 20. So that should be the one that you want. I hope that's clear. Excellent. Thank you all very much. I'm going to stop the recording now. As I said, that's the end of the formal presentation. I will stay in the room for a little bit longer should anyone have any questions.